All right, so I wanted to make a video on my breaker setup and why I prefer it over the inverse fair value gap trade setup that I feel like everyone's trading right now or attempting to. And I see a lot of similarities in the setups. And so I'm not bashing the IFVG setup. I'm just wanting to point out the pros and the things that I like about the breaker setup and why I prefer it. And so yeah, don't take this as just bashing a setup, but rather just pointing out why I trade a certain way and why I trade the way that I do. I've been trading the breaker for 3 years now and I strategy hop for a year and a half and settled on the breaker, and I've never left it, and I'll show you why. So we'll go into Tuesday here, the 3rd. I'm just going to show you like 3 or 4 examples from this past week of the inverse trades and the breaker trades and why I prefer the breaker. So 8:30 open here. I've always had my charts in Central Time. I know ICT likes Eastern. The CME is based out of Chicago in Central Time, so I'm always going to keep my charts on Central, but that's besides the point. 8:30 open here. So I saw a lot of people take this trade on Twitter. This is the first big bearish fair value gap, and if you're looking for higher prices, this is the perfect entry here for the inverse trade setup. And so I would never take this trade simply because we're in a straight downtrend. Yes, this does look like a possible reversal. However, with my breaker setup, this really wouldn't even be considered a good breaker because there's no major sweep here on this candle. Like, there's no good sweep. Like, look at this leg. I would have to see a sweep here before I'm looking for a long. But if you're an inverse fair value gap trader, this looks good. This is a strong candle down for it to just rip back up. You know, this does look like a reversal. At least it looks like it's going to come back up into here. But we don't. I know a lot of people entered here at 798 or even a little bit lower, 790s. First of all, your stop is down at the 50s, which is going to be a 40-point stop, and just absolutely rips your face off. And the breaker being here, or even potentially this candle being the breaker. We never trade above it, so we never get an entry there. Okay, that's the first example. And I'll go to 4th. All right, again, market open at 8:30. Here, I'm going to delete this because it gets a little messy. We get an inverse candle here. This is inverse. Let's say you enter, again, you're entering here, 340s. Where's your stop? Your stop's got to be below this candle, which is 260. That's an 80-point stop. That's unbelievable. That's such a bad entry, in my opinion. Granted, could this have taken off and run to this high for 340 to 40 points, 50 points? Yeah, and that would have been a good trade. Very well could have done that. You very well could have taken 340 to 380. But a lot of times when you enter in these trades, you're risking, like I said, 80 points. You're wanting to make at least 80. So, again, this trade comes back on you. Likely stops you out break even. With the breaker setup, this is the highest closed green candle before the move lower. So we never get a close above, and we never get an entry here long. Again, that's why I like the breaker setup. That's why I prefer it. And I'm never entering a trade here long because I never get confirmation over the breaker candle. Let's see if I have any more here. I don't have any more here. Again, no confirmation here to get long. We never trade above this breaker candle. Let's see. Let's go to the next one. February 5th. Okay, this is probably the best example of the week, why I prefer the breaker setup. So, again, market open 8:30. Strong move down. Get some nice rejection wicks off of this bearish fair value gap, which honestly, if I'm an inverse fair value gap trader, I like to see that, and I want to see us trade above for my entry. All right. Again, I know a lot of people that took this. Shout out Diego Trades. I know he took this. I watch his videos. I've followed along with his journey forever. Love what he's doing, but he trades this setup, and he did make money off of this. But again, if you're entering on the true inverse fair value gap setup, you're entering here, or somewhere along here. I think Diego got a better entry. But if you do it by principle on the 1 minute chart, it's 813 entry. Your stop is insane. It's such a bad entry. 830, it's a 100-point candle. So it's just like, it's impossible to trade. I think you can trade it like Diego did and just go small size micros and then get out somewhere in here and scale out. But again, that's not sticking to the rules. That's not the trade setup. You're looking for 1-to-1. So 1-to-1 here would be a 100-point stop for a 100-point winner. You would get absolutely wrecked here on this retracement. You have to sit through 813 down to 760, 60 points of drawdown minimum. Again, it's possible, it's doable, it actually works because we do end up reversing, but if we take away the inverse and we're trading the breaker setup, which is the highest closed green candle, before the sharp move lower, and this is it, your entry is here at 780. So you're getting a 35-point better entry right here at 780. Your stop, again, a stop is massive, down to 700, 80-point stop, which is better than a 100-point stop. And then from here, you can go break even at 848. You're already 50 points in the money. So, or 60 points in the money, whatever it is. So this is why I like the setup, the breaker setup. You're trading as price comes down into an area. That's one of ICT's biggest points when he talks about setups and how to enter trades, is you want to be trading when the market is moving in the opposite direction of your target. So you don't want to be entering on a mass, everyone's entering up here. That's why oftentimes when I see these inverse fair value gap entries, they're immediately in drawdown when they enter, like every time it seems. Sometimes they're not, sometimes the trade works. I get it. It does work, that you can make money off of it. I just think the breaker is more optimal because it's very similar. If you notice how these setups are, like, a lot of times there's a breaker, there's an IFVG right beside it. It's just, I'm trying to get a better entry. So instead of entering here, I'm entering down here in the breaker. It's a better entry almost every single time. Let's see, is it the last one? There might be one more. 6th. Again, I'm not trying to bash the IFVG setup. I just think there's a better way. I think there's a better setup, and that's why I'm trading it. That's why I continue to trade it. For anybody that's struggling with the inverse setup or what candles to use, what fair value gaps not to use, try implementing the breaker. At least start looking for them, because it allows you to look for, it just takes away a lot of noise. There's so many fair value gaps on a chart, especially the 1 minute chart. There's so few breakers. It limits the noise. It allows for better entries. You can actually pair this with the IFVG setup, so you don't even have to abandon the strategy. Just use the breaker as confluence or as a better entry model. So look for your inverse fair value gaps, and then say, hey, where's the breaker along with this? So again, one more example. Here is a bullish fair value gap. Let's see, I'll make it blue. This is bullish, getting some nice wicks off of it, which is good to see. And then you want to see a break lower through it for the inverse setup. Again, entries here, like, it's not a terrible entry, but again, you're probably going break even at 880, moves down 30 points. Not a great entry. Again, breaker here. Breakers here for the bearish breaker. You're not really getting an entry here, honestly, on the breaker setup. You could honestly even use, see, this is such a massive candle. I wouldn't like this for the breaker, but this honestly would be the breaker setup. Once you close below, wait for a retracement, boom, you get an entry there at 850. Runs down basically 100 points from there. I don't know. I don't like this setup at all. I don't like this, how big this breaker is, but you get the point of why I prefer the breaker setup. So yeah, if you trade inverse fair value gaps and you're struggling and you're somewhat looking around, like, consider the breaker setup. DM me. I can send you thousands of chart screenshots of examples of this trade setup working out. It works on all time frames. You can even trade the 15-minute if you want to be picky with it, or you can trade down to the 15-second, and it works. I scalp a lot on trending days. I scalp the 15-second breaker because you can look for, like when you see a pullback in the market, and you're like, oh, this is a good pullback, but where do I enter, right? With the 15-second breaker, you can wait for a pullback and then trade the breaker on the pullback in a 15-second chart for scalping long. And your stop is anywhere from 15 to 20 points. Your risk is very mitigated, and then you're looking for 2 to 1. And on trending days, it's nothing. It's really a gold mine, honestly, especially the last few weeks with how volatile price has been. You want to limit your risk. So I drop down into a lower time frame, limit my risk, keep my profit targets consistent, 2 to 1 at least, and yeah, let it go from there. So hope you learned something from this video. Appreciate you watching. I'll be making more breaker setup videos in the future. But yeah, let me know what you think. Give me your thoughts, and I'll see you on the next one. Peace.